Preparing for Accounting Analyst at Windstream interview? You've reached Candy Mentor, and this video is for you. We'll walk through 20 key questions you're likely to face. For each question you'll see a sample answer followed by the key points to cover. Subscribe, like, and share, and drop a topic request in the comments. Question 1. Walk me through how you would prepare an accrual at month end. I begin by identifying goods or services received before month end but not yet invoiced. I review contracts, purchase orders, receiving reports, prior month trends, and manager input to estimate the obligation. Then I debit the appropriate expense and credit accrued liabilities, retaining clear support for the estimate. I normally reverse the entry in the next period and compare the actual invoice with the estimate. Any material variance should be investigated and explained before closing. While answering, focus on identifying incurred expenses, gathering supporting evidence, estimating the liability, recording the journal entry, documenting assumptions, and reversing or truing up the accrual in the following period. Question 2. How would you perform a bank or balance sheet reconciliation? I would compare the general ledger balance with the bank statement or other independent supporting schedule. I would identify legitimate timing items, such as outstanding checks or deposits in transit, separately from errors, duplicate postings, missing entries, or unauthorized transactions. Each reconciling item should have an explanation, owner, and expected resolution date. I would post required adjustments, obtain review evidence, and ensure old or unusual items are escalated rather than carried forward indefinitely. Make sure to cover comparing the general ledger with external support, investigating timing differences, identifying errors, preparing reconciling items, documenting resolution, and escalating aged or unusual differences. Question 3. What steps would you follow during a monthly close? A disciplined close starts with a calendar showing deadlines, owners, dependencies, and review points. I would post recurring entries, record accruals and prepaids, reconcile key accounts, validate subledger to general ledger balances, and investigate material variances. I would maintain a checklist and evidence file so another reviewer can reproduce my work. If an input is late or unreliable, I would communicate early, quantify the impact, and propose a documented estimate rather than silently delaying the close. In your answer, talk about close calendars, completeness checks, recurring entries, reconciliations, review controls, variance analysis, dependencies across teams, and communicating issues early to protect reporting deadlines. Question 4. How do debits and credits affect the financial statements? Debits and credits are the mechanics of double entry accounting, not simply increases and decreases. Assets and expenses normally increase with debits, while liabilities, equity, and revenue normally increase with credits. For example, recording a $10,000 utility accrual debits expense and credits accrued liabilities, reducing profit and increasing obligations. Every entry must balance, preserving the accounting equation. Understanding the account type and business event prevents mechanical posting errors. Be sure to mention the accounting equation, normal balances, double entry bookkeeping, income statement effects, balance sheet effects, and why every entry must remain balanced. Question 5. How would you account for telecommunications revenue at Windstream? I would first understand the service contract and identify the performance obligations, such as voice, broadband, data, or equipment. Revenue should be recognized as the services are delivered, while usage-based or variable amounts require support from billing and operational reports. I would test cutoff around period end, reconcile billed amounts to the general ledger, and investigate credits, disputes, and unbilled revenue. The key is linking accounting entries to reliable service and billing data. Focus on identifying performance obligations, contract terms, service periods, billing data, usage-based charges, revenue cutoffs, credits, and reconciliation between operational systems, billing platforms, and the general ledger. Question 6. What is ASC 606, and how could it affect a telecom company? ASC 606 uses a 5-step model. Identify the contract, identify performance obligations, determine transaction price, allocate that price, and recognize revenue when obligations are satisfied. For telecom arrangements, a contract may bundle connectivity, equipment, installation, and maintenance. I would assess whether each item is distinct, estimate variable consideration such as usage or credits, and recognize revenue over time or at a point in time as appropriate. Strong documentation is essential for judgmental conclusions. Make sure to cover the 5-step model: contract identification, performance obligations, transaction price, allocation, transfer of control, variable consideration, and contract modifications relevant to bundled telecom services. Question 7. How would you analyze an accounts receivable aging schedule? I would review balances by customer and aging bucket, then compare the profile with historical collection patterns and current business conditions. I would separate normal timing issues from disputes, billing errors, bankrupt customers, and long outstanding balances. Subsequent cash receipts provide useful evidence, but I would also evaluate credit risk and specific known issues. The analysis should support the allowance for doubtful accounts, identify collection actions, and highlight trends requiring management attention. In your answer, discuss aging buckets, collection history, customer risk, disputes, subsequent receipts, credit balances, allowance methodology, and escalation of potentially uncollectible telecom receivables. Question 8. How would you account for capital expenditures and network assets? I would capitalize costs only when they create or improve a long-lived asset and meet company policy. Routine repairs belong in expense. During construction, eligible costs would remain in construction in progress until the asset is ready for use. I would verify approvals, invoices, project codes, and placed in service dates, then transfer the balance to the correct asset class. Periodically, I would reconcile the fixed asset register, test disposals, and review impairment indicators. Be sure to mention capitalization criteria, project approvals, construction in progress, placed in service dates, component tracking, disposals, impairment indicators, and reconciliation of asset records to the general ledger. Question 9. What factors determine depreciation expense for property and equipment? Depreciation depends on depreciable cost, estimated useful life, residual value, method, and the date the asset is placed in service. For example, straight-line depreciation allocates depreciable cost evenly over the useful life. I would confirm that the asset class and useful life agree with policy, then check additions, transfers, disposals, and changes in estimates. Depreciation is a non-cash expense, so it reduces book income without directly reducing current period cash. Focus on depreciable basis, useful life, residual value, method, placed in service date, asset classes, changes in estimates, disposals, and the distinction between depreciation expense and cash spending. Question 10. What is your approach to accounting for leases under ASC 842? I would identify contracts that convey the right to control an identified asset and determine whether they are operating or finance leases. At commencement, the company generally records a right-of-use asset and lease liability based on discounted payments. I would validate the payment schedule, term, renewal assumptions, discount rate, and modifications, then reconcile the lease system to the general ledger. Completeness is especially important because leases may be embedded in service contracts. Discuss identifying leases, right-of-use assets, lease liabilities, discount rates, operating versus finance classification, modifications, completeness, and reconciling lease software reports to the general ledger. Question 11. How would you account for interest expense on Windstream's debt? I would start with the debt agreement, amortization schedule, principal balance, stated rate, and payment terms. Interest expense should reflect the contractual or effective rate for the period, including amortization of applicable discounts, premiums, or financing fees. I would accrue interest through month-end, reconcile activity to lender statements, and confirm payments and balances. Any amendments, defaults, or covenant issues should be communicated because they may affect classification and disclosures. Make sure to cover principal balances, stated and effective interest rates, accrued interest, amortization of fees or discounts, covenant reporting, payment dates, and reconciliation to lender statements. Question 12. What accounting issues can arise when a company undergoes restructuring or bankruptcy? Restructuring can affect debt classification, interest accruals, professional fees, creditor claims, asset values, and disclosures. I would carefully distinguish pre-petition obligations from post-petition activity, follow court-approved arrangements, and coordinate with legal, treasury, and financial reporting teams. I would also assess going concern implications and whether fresh start accounting or other specialized guidance applies. The priority is accurate, well-supported records because judgments may be closely reviewed by creditors, auditors, and regulators. In your answer, cover classification of obligations, interest accruals, professional fees, fresh start considerations, going concern disclosures, creditor claims, court-approved plans, and coordination with legal and external reporting teams. Question 13. How do the income statement, balance sheet, and cash flow statement connect? The statements are linked through the accounting equation and changes in cash. Net income flows into retained earnings and is the starting point for operating cash flow under the indirect method. Non-cash expenses such as depreciation are added back, while changes in working capital explain other operating adjustments. Capital spending appears in investing cash flow, and debt or equity activity appears in financing cash flow. Ending cash must reconcile to the balance sheet. Focus on net income flowing into equity and operating cash flow, balance sheet changes driving cash flow adjustments, non-cash expenses, investing activities, financing activities, and the importance of reconciliation. Question 14. How would you investigate a significant monthly variance? I would compare the actual result with budget, forecast, and prior periods, then decompose the variance into volume, price, timing, mix, and classification effects. I would trace unusual movements to invoices, operational metrics, journal entries, or supporting schedules rather than relying on a general explanation. After quantifying the root causes, I would discuss whether the item is recurring or one-time and provide management with a concise explanation and forward-looking implication. Be sure to mention establishing a reliable baseline, separating volume, price, timing, and classification drivers, validating source data, quantifying root causes, and presenting a concise explanation with recommended action. Question 15. What internal controls are most important in an accounting analyst role? Important controls include segregation of preparation and approval, restricted system access, documented journal entry review, reconciliations, approval thresholds, and monitoring of interfaces between billing, subledger, and general ledger systems. I would ensure evidence shows who performed the control, when, what was reviewed, and how exceptions were resolved. A control is not effective merely because it exists. It must operate consistently and detect or prevent material errors in time. Discuss segregation of duties, approval thresholds, access controls, reconciliations, journal entry review, supporting documentation, system interfaces, exception reporting, and timely remediation of control deficiencies. Question 16. Which Excel tools would you use to analyze accounting data? I use pivot tables to summarize transactions, SUMIFs to build controlled reconciliations, and XLOOKUP or index match to compare datasets. Conditional formatting helps identify exceptions, duplicates, missing values, and unusual amounts. I keep raw data unchanged, document assumptions, and use control totals so outputs can be validated. For a large reconciliation, I would combine Excel analysis with system reports and preserve the file structure so another analyst can reproduce the result. In your answer, mention pivot tables, XLOOKUP or index match, SUMIFs, conditional formatting, data validation, duplicate checks, reconciliation formulas, and protecting the integrity of source data. Question 17. How would you validate data flowing from a billing system into the general ledger? I would reconcile source system totals to the interface file and then to the general ledger, using transaction counts, dollar totals, and account-level summaries. I would test cutoff, mapping, rejected records, duplicate transactions, and unusual manual overrides. Any difference should be assigned to a root cause, such as timing, configuration, or data failure, with evidence of resolution. Automated interfaces reduce effort, but they still require completeness and accuracy controls. Focus on completeness, accuracy, cutoff, interface totals, account mapping, rejected transactions, control totals, subledger reconciliation, and investigating differences before relying on automated postings. Question 18. What would you do if you discovered an error after the monthly close? I would first preserve the supporting evidence and determine the error's amount, affected accounts, periods, and tax or reporting consequences. I would compare it with materiality thresholds and promptly notify my manager or controller rather than trying to correct it quietly. Depending on policy, we might post an adjustment, reopen the period, or correct the next close. I would document the decision, identify the root cause, and recommend a control improvement. Make sure to cover materiality, impact assessment, evidence preservation, notifying the reviewer or controller, correcting entries, disclosure implications, root cause analysis, and preventing recurrence. Question 19. How would you handle pressure to record an unsupported entry? I would respectfully explain that an entry needs a valid business purpose, appropriate accounting support, and approval under policy. I would ask what evidence or guidance supports the proposed treatment and suggest a compliant alternative, such as an accrual based on documented estimates. If pressure continued, I would escalate through the controller, ethics, or reporting channels and keep a factual record. Meeting a deadline never justifies misstating financial results. In your answer, emphasize professional skepticism, accounting policy, objective evidence, respectful challenge, escalation channels, documentation, independence, and protecting accurate financial reporting under deadline pressure. Question 20. Why are you interested in an accounting analyst role at Windstream? Windstream interests me because telecommunications combines recurring revenue, extensive network assets, complex billing data, leases, and significant close activity. That environment would let me apply core accounting skills while developing stronger operational and analytical judgment. I would bring careful reconciliations, Excel proficiency, clear documentation, and a willingness to investigate unusual results. I also value cross-functional work with billing, operations, finance, and audit teams because accurate reporting depends on connected processes. Be sure to mention interest in telecommunications, complex operational data, financial discipline, process improvement, cross-functional collaboration, and how your analytical and accounting skills can support reliable reporting. If you are still with us, congratulations. You are much ahead of the rest and serious about preparing for your interview. We hope we were able to add value to your preparation and create some helpful content. Do not forget to like and share this video. Your small act can do great things for us.